In a world of market volatility and uncertainty, finding stability and steady growth in your investment portfolio is paramount. A better way to achieve this is through index funds, particularly with those offered by Fidelity, renowned for their reliability and performance. Whether your investment goal is growth, dividends, or both, 6 Fidelity index funds stand ready to surpass your expectations. These funds offer reliability and are ideal for long-term investment. For each fund, we will discuss their investment strategies along with their potential growth. At the end, we will see how investing $10,000 could work out. Let's get started. Number 6. Fidelity Total Market Index Fund, ticker symbol FSKAX. Like the name indicates, the fund invests in a broad range of U.S.-based companies in the market, which includes 80% of the assets in stocks and 20% in bonds. The benchmark is to closely track the Dow Jones U.S. Total Stocks Index. There are 3,888 stocks with different market caps, which provides you a very diversified portfolio and reduces risk. Here is a list of the top 10 holdings. They only take up to 26.98% of the portfolio, but they have bigger impacts to the index compared to the rest since the percentage is bigger. When the stock market grows, your investment will increase its value. Also, owning FSKAX saves you valuable time to do research with very little cost. The expense ratio is 0.015%, which means Fidelity charges $1.50 for every $10,000 you invest. This is very affordable for most of us. In the past 10 years, the fund has given a return of 11.97% per year. This is about the same as the market. Unless you have a team doing research for you full-time, it is a good idea to take the average return of the market while you can focus on other things. For a $10,000 investment, your investment would be $32,778 after 10 years. Waiting 5 more years, your investment would grow to $64,276. Now let's measure alpha and beta to see how risky they are. Alpha means the investment's return relative to the market, or S&P 500. The alpha is negative 2.02, so the return is a bit lower than the market. Beta is defined as the measure of the overall volatility or risk. The beta is 1, which means it has similar volatility as the market. Number 5, we have the Fidelity 500 Index Fund, ticker symbol FXAIX. This fund mimics the performance of the S&P 500 index, also known as the market. By investing in FXAIX, your fund is exposed to 500 large companies in the U.S. stock market. The fund invests 99.38% of its holding in the U.S. stock market and the rest in Europe. The main sectors the fund invests in are information technology, financials, healthcare, and consumer discretionary. Information technology has been growing rapidly in the recent years. In 2023, a lot of the tech stocks have double-digit in growth. Financials, healthcare, and consumer discretionary are always in demand. Impressively, the fund also has an expense ratio of 0.015%, which is very cost-effective based on its performance. It is a good choice for 401k and IRA. Here is a list of top 10 holdings. We can see 9 out of 10 stocks are in the tech sector. When these stocks grow, the index moves up as well since they are holding 29.46% of the fund. It is very similar to FSKAX, but the percentage of each is a lot bigger because the portfolio holds 500 companies, versus FSKAX has almost 4,000 companies. In the past 10 years, the average return of FXAIX is 12.64%. For a $10,000 initial investment, you would have $34,507 after 10 years. After 15 years, your investment would be $72,631. In the past 10 years, the alpha is negative 0.01, so the return is pretty much the same as the market. The beta is 1, which means FXAIX is as volatile as the market since this fund mimics the S&P 500. Number 4. Let's check out Fidelity Growth and Income Portfolio Fund. Ticker symbol FGRIX. This fund stands out for its unique blend of dividend income and growth potential. The current dividend yield is at 3.69%, and the 10-year dividend growth rate is at 16.95%. This diversified portfolio comprises 506 companies in 12 sectors. The top 4 sectors are the same as FXAIX. They are information technology, financials, healthcare, and consumer discretionary. They pave the way for robust growth. The rest of the sectors, industrials, communication services, consumer staples, energy, and real estate, are offering attractive dividend payouts. So it is good for investors looking for growth and dividend payouts. Additionally, FGRIX invests 85.44% of the fund in domestic market and 11.25% of the portfolio in foreign countries. It effectively diversifies risk across international markets. In the past 10 years, the average return is 10.95%. Compared to other dividend ETFs, this is an attractive payout. For a $10,000 investment, your portfolio would grow to $36,411 after 10 years, and the annual dividend is $3,359. After 15 years, your portfolio would be $106,943. Now, the dividend is $9,860 per year. The beta is 0.89, exhibits lower than the market risk. As a result, this is the fund for investors looking for both growth and dividends. Number 3. Let's check out Fidelity MSCI Information Technology Index. Ticker symbol FTEC. This fund invests in the information technology sector, comprising 302 stocks of varying sizes, including large cap, mid cap, and small cap companies. Notably, it places 40.55% of its investments in software companies, 25.04% in semiconductor, and 20.87% in hardware. These companies are closely related to each other. Interestingly, Microsoft and Apple hold 40.30% of the fund, and they are the top 2 holdings. The top 10 holdings within the fund have consistently performed well in recent years, contributing to its overall growth. Over the past decade, the fund has achieved an impressive return of 19.43%, surpassing many investment options. Additionally, the expense ratio is at a reasonable 0.084%. For a $10,000 investment, you would pay $8.40 for the fund management. This is lower than most tech ETFs. As the development of AI, the demand for these tech companies is much higher, so this fund is expected to grow in the coming years. If you're investing $10,000 for 10 years, your investment would become $58,004. 15 years later, this investment would be $173,981. This is a much higher return than the market. In fact, the alpha is negative 0.05 and the beta is at 1, so this fund is not very risky. Number 2, we have Fidelity Large Cap Growth Index Fund. Ticker symbol FSPGX. The benchmark is the Russell 1000 Growth Index. This fund is investing in large cap stocks with the market cap of $10 billion or more. Large cap stocks have very good upside potential and show great resilience compared to small cap stocks when the market is heading down. One large cap stock may still be risky, but this fund has 447 large cap holdings, further enhancing the stability of your investment. In a bull market, when stocks are gradually going up, this fund would show great upward mobility. Since this fund is very new to the market and most stocks are in the tech sector, the growth is at an outstanding rate of 18.74% per year in the last 5 years. The expense ratio is at a very affordable rate of 0.035%, which is lower than most ETFs in the market. Investing $10,000 for 10 years, your portfolio would grow to $49,328. In the 15th year, your investment would be $119,714. Even though this fund has not been around very long, the holdings, the growth, and the expense ratio are all making this fund a great candidate for your portfolio, especially for the long-term investors. Number 1. Let's look into Fidelity Select Semiconductors portfolio, ticker symbol FSELX. It is a strategic investment avenue targeting the thriving semiconductor industry, a key driver of technological advancement. The fund manager selects stocks from various sectors within the semiconductor industry, encompassing giants like NVIDIA, designs and sells GPUs for gaming, cryptocurrency mining, and professional application, as well as Marvell, offers semiconductor solutions for compute, network, and security. Moreover, this fund includes foreign players like Taiwan Semiconductor Manufacturing and ASML Holding to diversify its portfolio. The top 10 holdings commanding 77.38% of the portfolio. The number 1 holding is NVIDIA, which performed very well in 2023 with a growth of 239%, and it holds 27.21% of the portfolio. This fund has a 10-year return of 26.93%, which is very high growth. This is a lot higher than the market. Therefore, the beta is also at a higher value at 1.69. Additionally, this fund is actively managed, so it adapts to the market changes much faster than the passively managed ETFs, which leads to a higher expense ratio of 0.68%. For a $10,000 investment, your portfolio would grow to $89,556 in 10 years. In the 15th year, the size of this portfolio would be $302,715. Even if this fund has higher return than the most, semiconductor has its own cycle. It is a good idea to allocate part of the fund to it. In this video, we have discussed 6 Fidelity index funds that have great performance over the years. They are all good to buy and hold forever. Thanks for watching. Be sure to hit the like and subscribe button for more helpful tips like this. See you in the next video.